Hello, everybody. Thank you so much for joining us today. I am super excited of today's live because I have my good friend and mentor and everything else, Charles Park. Thank you so much for joining me today.
It's a pleasure to be
Um,
here.
Yes, honestly, I'm super excited of all the topics that he selected. I think, nobody's talking about these specific topics, and I am very excited for you guys to hear all about it.
Great. Thank you, Carla. So why don't we get this show on the road? For those of you who don't have never met me before, my name is Charles Park. I'm the managing broker at Remax Realty Services in Brampton and Mississauga. I've been on your show a couple of times before, and I'm very pleased to give you guys this market update in the real estate sector, as well as things that are affecting the market that you may or may not know. So let's jump right into it, Carla. Let's put that first slide up.
Perfect.
So many of you have already seen this slide, I'm sure, from other places. It's not new. It's been around for a few weeks now. But I think the key indicators, if you can, I'm not sure if you can zoom in the bottom right-hand corner there, Carla. I'm not sure if your computer can do that. But let's go over some of the year-over-year summaries. Sales for February were 4,783 this year compared to the 9,028 last year. That's a 47% drop in physical transactions in the Toronto Regional Real Estate Board. That is a significant change, but as most of us know, February was really the last boom month of 2022. And now that we are comparing, today to a year ago, you're going to see that steep drop in the number of transactions. Now, my heart goes out to a lot of the agents out there that did a lot of transactions a year ago. And I've actually met a few agents who have not even done a single transaction since, which is
Wow.
shocking, but true. So when you think about it, the previous year, the Toronto Regional Real Estate Board did about 121,000 transactions. We are hovering or predicting about 70,000 transactions right now for 2023. That is the forecast. So for
Wow.
real estate agents that are, live watching this, or I guess if they watch your recording, they're going to be kind of, tuned in to see exactly what's going on. Now, this isn't a coaching session. I do know that when I got my license back in 1995, it was the bottom of the real estate market. This is not a new environment for me. And for those of us who were around back in the mid 90s, we remember when the market took that serious shift in the late 80s, early 90s, and it bottomed out in 1995. It was scary. I think homeowners were genuinely worried about staying in their houses. We had already gone through a government, rapid increase of interest rates. They hit, 18, 19, 20% back in the late 80s. Because what were they trying to do? The same thing. They were trying to curtail inflation. So let's talk about that in just 1 minute. New listings, there were 8,367 new listings last month compared to the 14,153. That is a 40% reduction in new listings. So we're not only low in transactions, we're low in new listings. There are more active listings now, 9,643 compared to last year's 6,984. So we have 38% more inventory to buy that's active out there because it's just not selling as quickly. How quickly? Well, the average listing days on market is around 22 days. But the real number is when people cancel and relist their house, which they seem to be doing, because you may try a price, you don't get that price, and sometimes your listing agent is like, oh, okay, I tell you what, we're going to cancel the old listing, we're going to put a new listing out there at the new price, preferably lower. But when you combine those two listings, we're looking at an average days on market of 33 days, which
It's
is
nothing.
a 200% increase from a year ago.
Wow.
So for, if you're thinking of selling your home today, you need to know these numbers because that is the environment we're in. Now, obviously, these are averages. So there are some people that are selling in a day. There are some people that are taking months to sell. Why is that? Let's jump into the next slide. If you can put up the BOC chart.
Yes, yes,
Yeah,
yes.
this should be very interesting. I think you smiled when you saw that in your email, didn't you, Carla? What did you think of it when you first saw it?
Well, that definitely is something that it has happened in the past, right? Like,
Yes. So you can
yes,
see this goes back to about 2007, which is really the last time we experienced sort of a severe downshift. But you can see what they did to react to that. What did the government do? They lowered interest rates. That is what they did to stimulate the economy. But what happened since 2007, 2008, 2009? It kind of wavered for a
exactly.
very long period of time. Okay, and we're looking both at the American Fed and the Bank of Canada rate. But here's the real telltale. We know that in mid 2022, a year ago, what did the Bank of Canada decide to do? They decided to increase rates. They said they were going to do them slowly. Does that slope you see at the end of this chart look very slow?
No.
It looks quite steep, doesn't it?
Exactly. Yes.
I've been reading articles all over the place, and I'm sure you have stories as well, Carla, of people struggling to stay in their houses. They had a $3,000 mortgage, a $4,000 mortgage. Now they have a $6,000 mortgage, a $7,000 mortgage. This is per month.
Yes.
So you get why people are trying to stay where they are. And not only did the mortgage go up, what else went up? The cost of gas went up,
Everything.
groceries went up. Heaven forbid, property taxes are probably going to be going up as well, right? The city of Toronto did not get the money from Doug Ford's budget today that they expected. They were expecting $1 billion. That is not in the budget. So how is the city of Toronto going to react? They may have to raise property taxes. It is getting very expensive to live in the city of Toronto.
100%.
Okay. So this
Just
is
to
just a
buy.
graphical illustration of what I think people know. But if you take it back all the way back to 2007, 2008, and you can physically see now, for those of us who were selling in 2007 and 2008, were we used to these rates? Absolutely. These were normal rates. We are actually paying normal interest rates on our mortgages. What happened in between was it's almost like a once in a lifetime opportunity. It was free money. Now, the free money did stimulate and prop up the real estate market, did it not?
Mm-hmm.
It was easy to get qualified. Like if you look at the principal versus interest that people were paying on a monthly basis, it was all mostly principal and just a little bit of interest.
Yes.
And how quickly things have turned around. We are actually in the environment. So at the Bank of Canada interest rate being at 4.5%, I believe the Fed just increased it by 0.25%. So although Canada decided not to increase last month, the Fed in the United States did increase it by 0.25%, and as did Great Britain.
Yes, 100%. But let's remember that their inflation is totally different from our inflation.
Absolutely.
Our inflation just went down to 5.2%, which is way better than Europe or the United States. But definitely, global economy is always gonna affect Canada as well. We are all united in a way.
That's right.
Yes.
Now
But
let's talk about the scary factor.
okay.
Carla, you're in the banking industry. Okay.
Yes.
Why are banks failing in the US right now?
I think it's because of the lack of to be honest, they give easy money. They give the easy money too fast. They are looking for a growth of 200% or something like that. And in Canada is a lot more conservative. They don't
Absolutely.
take chances like in the States, in my opinion.
So what happened with the Silicon Valley Bank, right, is that they actually took, I believe, almost a third of their entire deposits and invested it in secured backed mortgages. Those low interest rate mortgages is what they propped up the bank with. And then as soon as the interest rates rose, guess what? They owed more money than they had.
Yes.
And that was a big problem. We do not have that. So that's going to segue into my next slide. If you could bring up the link
Mm-hmm.
from 1996, the last time a bank failed in Canada was in 1996, June 4th, 1996. 2,600 Canadians discovered that their savings were not immediately available from their financial institution. They had entrusted a total of $42 million in deposits to a Calgary-based security home mortgage corporation, which had closed its doors for good. Okay? So
Okay.
it's not that it's never happened in Canada, but it's been 27 years since it's happened. Now, this article, and you can feel free to share this with your audience. What it's really saying is nobody lost a penny, because we have
Exactly.
in Canada something called the CDIC, Canada Deposit Insurance Corporation. In 27 years ago, each person was only insured up to $60,000. But if you had $60,000, in a bank, that was a lot of money.
It was a lot of money. Not the 60,000 of today's money, 100%.
Absolutely.
And Canada has it for $100,000.
That's
And
right.
to be completely honest, you can speak to your bank, because even banks have different divisions within the bank to make sure that at least 500,000 is insured with them. So if you are one of those people that are scared right now, obviously, like if you have it in the stock market, they cannot insure it. Let's put this as an example. But if you have savings in your bank account, definitely up to 100,000 is 100% insured.
Per
And
institution.
per institution,
That's right.
exactly. And the same institution has other ways to protect your money, so talk to them about that.
Now, what a lot of people weren't really talking about was the technology. So
Mhm.
we all have our banking apps on our phones. What happened at SVB was when people got wind that there was a problem at the bank, they pulled out the phones out of their pockets, they started transferring money out of the bank. And their deposits dwindled so quickly. Like historically, if you think you had to go to the bank to withdraw your money, right? It took you time, but it was like instant money gone. And when a financial institution loses their liquidity,
Yes,
what happens?
they go bankrupt.
They go bankrupt. We do not have that problem in Canada. So what I'd like the message here to your viewers is have confidence in our financial institutions. Your money is safe, right? So don't think that it's going to go anywhere, which should also translate into confidence in the mortgages that they hold. And then you can go, and let's be honest. Yes, it's a little bit more difficult to get a mortgage nowadays, isn't it?
Yes.
But
Yes.
if you do qualify, you are sitting on that commitment letter, that pre-approval letter is worth its weight in gold.
100%. 100%. Let's remember that Canada is opening doors for about 500,000 people every single year. In 3 years from now, it will be 1.5 million people coming into Canada.
What's a,
Where
what,
are
what,
these?
what's a little bit disappointing though is we have 500,000 immigrants coming, but they can't buy anything because we have a foreign buyer ban.
Yes.
That's the disappointing. This is where government has overstepped its boundaries. They think that this is going to alleviate some of the, like it's a political statement is what it's really saying, is we're not interested in foreign money. But only, the last statistic that I read, it was between 3 and 5% of all the transactions were with foreign buyers. It was a very small percentage of the market. But let's face it, these people who want to be Canadian, who want to stay here, they should have the opportunity to live the Canadian dream and buy real estate. Wouldn't you agree?
I would agree, because a lot of the people that come to Canada, I think they do have most of them that dream to have their own home here. And most of them come with already a job and a good down payment and why not. But obviously they start somewhere with like um a course in a school, and then from there they get their work permit, and then from there, but by the time they are PRs, how much that $500,000 condo will cost, you know, 5 years from now. So definitely it is, I will agree with you that the government of Canada should be a little bit more flexible with the people that are trying to come.
It is interesting to me because I find that, well, so there were some exceptions to the rule, right? For example, for those who have filed, who are already here, who are not Canadian citizens or landed immigrants, who have filed taxes in Canada 3 consecutive years, they do qualify actually to purchase real estate. Foreign students, right? If they've been working here on a student visa and they've been here for a couple of years, they too, but they're capping it at 500,000. So
Exactly.
what can you buy in Toronto for 500,000?
Nothing. Well, a small condo
So
in some
these,
areas.
so the narrative here is that yes, these policies do affect the statistics that I presented to you today. Why are transactions down so severely? Because you know what? The government stepped in. They control the interest rates, they control policy, and the market must react to the rules. Those are the rules. And nobody wants to break the rules, right? Sometimes people try to find ways around them. But at the end of the day, for the people that are listening, they're going to go, well, I'm not one of those people.
Mhm.
And I want to follow those. I guess I'll wait the 2 year, it's a 2 year ban. So it looks like I'm going to wait. What's going to happen in 2 years? As soon as all of these people come back into the market, what do you think is going to happen?
Oh, the market is gonna get
It's going to get crazy again. Now, I'm happy to report that multiple offers are back.
yes. And I'm
I
happy to
can, from my
report.
chair on a daily basis,
Yes.
and I am from the offer registrations that I see coming through my office. I had somebody post on WhatsApp just the other day. He got notified that he went in for an offer presentation. 31 offers got registered on a property.
One of my clients won a house, but there was 25 offers in
Yep.
that.
I showed a property
Yeah.
not that long ago, just before I went to Vegas at the end of February, and 21 offer. It was, now obviously the asking price was $499,000. It was an $800,000 home. It ended up selling for $800,000, but guess what? 21 offers got registered.
Yes.
So you know what? People are savvy. People are opportunistic. For those people that are sitting on the fence, I notice that a lot of people are jumping off, and they're jumping into the market right now. Why?
Mhm.
Prices are going up.
Yes.
So if you've
And
been waiting, don't wait too long.
yes. And you know what, Charles? The fixed rate right now, since what happened with the Silicon Valley Bank, the bonds have gone down like crazy. So right now is a fantastic opportunity for sure, because if you are buying your home right now and you are closing, let's say for instance, May, June, July, in May, June, July, we're going to see fixed rates going down. And we are already seeing that from 5% is dropping to 4.79%, around there. Maybe some lenders have other um, promotions, and why not? But definitely, if you have a variable rate and you're in the fence right now, wait. Wait, because fixed rates are gonna be going
So
down for
wouldn't you
sure.
recommend people take a variable at this very moment? Because in anticipation of the rates going down.
It could be a good strategy. I'm not gonna lie. It could be a good strategy. You will pay the premium right now, but you will look at a better rate
So I've been talking to people who've
later
been
on.
affected by this rapid increase. You know what? It's almost like short-term pain for long-term gain. If you keep your variable mortgage, let's say you took a 3, 4, 5 year variable, and you're in your home. Yes, it's painful right now. I share that pain with you because you've had to endure these increases. But hang on, don't lock into a fixed rate just yet. Why? Because they will come down. I
Yes.
do believe that.
Yes. Yes.
And it's better for you to stay in your home, which is why there's less inventory on the market, because people want to stay in their home. And also, we saw from last year to now, we didn't talk about it, but the average price has gone down roughly between $200,000 to $300,000 on average, depending on what market you're in. Nobody wants to crystallize a loss like that. They're going to
Exactly.
be patient. They're going to wait for the market to rebound. Nobody wants to sell their home for less than what they bought it for.
Yes. I'm gonna be completely honest with you, Charles. I tell every single client is, if you jump in the real estate um, market, to be honest, you are jumping in the patience game. If you're not patient, it's not gonna take you anywhere. Why? Because as soon as you put an offer, there is multiple offers. But how often you have seen that one person do not end up buying, right? Like at the end of the day, that you try, but at some point you will buy. So I have some clients that have been going through multiple offers for like 6 months or something, but at the end they end up buying. So you just need that one chance to be able to buy. So honestly, just keep in mind that be patient with interest rates as well, because at the end it will be a win-win situation for sure.
So the message really is these rates that we're paying right now are quite normal.
Yeah.
My very first interest rate on my very first property back in 2001, which is when I bought my very first home, I was 31 years old. I was thrilled. I was elated. I got approved for a mortgage at 5.55%.
Wow.
5.55.
Is yeah.
Recently that sounds like a lot of money, but now that's a great rate.
Yes.
So I was happy. Now, when the rates went down, my bank, I was with the Korean Exchange Bank. They did something very unusual. They sold my mortgage to Scotia. So I ended up selling that house. I had to close and I had to discharge my mortgage with Scotiabank, not with the Korean Exchange Bank where I originally got my mortgage. Isn't that interesting? And that kind of ties back to the banking industry. People can sell mortgage securities to one another.
Exactly. Exactly.
Somebody buys that piece of paper and assumes the risk. Am I correct?
Yes. Yes.
But they got to
Actually,
do it strategically.
yes. In all the commitments, it says right there, we don't need your authorization for us to be able to sell your mortgage to another company. So it is part of the process for sure.
That's right.
When they see an institution that is going down, for sure there is other banks that will be interested on buying that debt for sure.
Right. Carla, can you throw up that last attachment? Are Canadian banks efficient? A Canada-US comparison. So
Yes.
this particular article illustrates the differences between the American and Canadian system. But what I found very interesting about this article is that the 6 top Canadian banks, and let's name them. We've got Royal Bank, Montreal, CIBC, TD, Scotia, and National Bank. They comprise 90% of the assets of our country. Can you imagine? That makes
I
us
didn't know that.
that makes us
I knew that they were
significantly
strong, but
different.
not that strong.
That makes us significantly different from the US run, state run banks.
Yeah, in the States, I think like they have, I don't know how many banks there were out there, but there was thousands, in the thousands. Um,
Well,
when I
300
last
banks in
checked.
recent history have folded in the US.
Wow.
So we just don't have that happening up here. It is the
No.
strength of our financial system. It's our checks and balances. It is government regulation. Okay. So at the end of the
Yes,
day,
let's just say that Canada wants to grow and wants to grow it at a pace that is not as fast as the States. They take more risk, we take less risk, but we're going slowly but surely.
absolutely, absolutely. So I do have some statistics from the United States real estate market. They are experiencing almost identical declines as we are here in Canada. However, because the average, let's talk about population. The U.S. outnumbers us immensely. We do not have the same population as they do, which is why they have so many financial institutions. They also have more money because they have a larger population. That's plain and simple. But they are in because this is why they can't control inflation as well as we can here in Canada. Once again, population. It's like a cruise ship versus a small yacht. You can turn the yacht quickly. You can't turn that cruise ship very quickly. It's slow and arduous, and you might hit the dock. So, comparing once again our real estate market to the American real estate market, things are slow to change, much slower to change down there than they are up here. I believe that the inflation that the Americans are experiencing is significantly different from the inflation that Canadians are experiencing. We actually have a much more better handle on controlling our smaller population as a country than the Americans do. But their average price is so much lower than the Canadian average price. Oh my gosh. My cousin, when she moved to Atlanta, we sold her house up here for like $500,000. And it was only like it was 3,000 square feet, 2-car garage. It was in Vaughan. And when she took that money to the United States for $480,000, she bought almost an acre on the top of a hill with a 4-car garage in Marietta, Georgia. I was shocked.
I know. I see in my Instagram all these people from Texas that are posting all the houses there, and I'm like, this is like a mansion, and it's for like $300,000 American. I'm like, oh my god, what are we doing wrong?
I know. Now, here's something that people should know. We are experiencing emigration. People are leaving the Greater Toronto area. I do know of some colleagues, and we have mutual friends who have left Ontario, right, in search of a better life in other provinces, because what they live in and can afford here versus other provinces within Canada is a completely different lifestyle.
A completely different lifestyle. Once you are out of, like, you don't consider British Columbia or Alberta. Well, Alberta is actually pretty decent, or Ontario. I think those two are very, very, very expensive. I think parts of Ontario is still pretty reasonable, but you will have to be very far from the city of Toronto for sure.
Yeah. So that's, let's end it off with affordability. We know affordability is a key factor in whether or not people can buy real estate. If you partner yourself up with the right mortgage broker and the right real estate agent, you will find it takes a bit of work, but you will find that home, right, that is suitable for you at the price that you want. You just need that attention from the professionals that you hire. Would you agree?
It's 100%, 100%. Honestly, it when you go, let's say, just to a bank and just take like a pre-approval or something like that, you're tied to a 9 to 5. What if you have access to somebody that actually works outside the banking hours, and you are able to run a scenario where, instead of, like, like, you find a home that was cheaper in property taxes, let's say, for instance, and you are able to squeeze an additional $10,000 that can make the difference in your in your first
Your purchasing power.
exactly in your offer. So it does take a team to win. A
It
hundred
absolutely does.
percent.
Now,
A
Carl, I
hundred
have a
percent.
question for you. I have clients right now that are asking me questions regarding rental properties. Is it easier to qualify to buy a home where there's a tenant, right, paying rent? I guess it's that rental offset. Does that money that a tenant pays for rent qualify to help an individual get a mortgage for a property?
Yes, yes. So if you're looking for like a home that has a legal basement, let's say for instance, definitely you can qualify for about $100,000 more than what you were originally approved. So definitely speak to the mortgage broker because these little things can make a difference. And keep in mind that not all every single lender will have the same guidelines, but some of them have similar guidelines. So it's not your job to know as a client. It's our job to make sure that we run all the scenarios for you, and definitely is we can make it happen when there is a rental involved. 100%.
So the dream of home ownership is still alive.
It is still alive. 100%.
All right. So, I think it's really important to convey that to people. Some people feel a little bit hopeless. They feel like, "Oh my gosh, I can't pay these interest rates. Oh my gosh, I can't pay these prices." You think the price of real estate is high right now? You just wait, because right now they've already come down $200,000 or $300,000. History repeats itself over and over and over again. And the graphs that I have shown you guys show that what comes down must come up. When is it coming up? Has the market bottomed out? That's the big question.
I think so. I think whoever bought like around November, December, correct me if I'm wrong, but I think whoever bought there got a spectacular price with no competition or very little competition
That's right.
compared to what is coming.
You
100%.
got a condition on financing, you got a
And
condition on
and
inspection.
Charles, yes, and Charles, also hear me out here. As the fixed rates start to go down, there is going to be different affordability for other people. So if you're able to find a home right now, is perfect, because in a month or two, people are going to be able to qualify for more, and there is going to be way more competition than what it is today. So definitely start.
But they're going to have to qualify for more, because if they don't buy now, they're going to have to pay more.
Exactly.
There's always a counterbalance to this market, isn't there?
100%.
And it's hard to get ahead of. So where you save money here, you have to spend money over here. And that is the biggest consideration right now. How much more can I qualify for? And then I'm sure you're giving pre-approvals out right now, saying, okay, your budget is $750,000 at the current interest rate.
At the current
But
interest
if the
rate.
interest rates do come down, you could probably qualify for a little bit more. But hey, nobody has a crystal ball. What if for interest rates? What if this announcement from the Fed, the U.S. Fed, create and we get indicators that inflation rates are not under control immediately? You know the answer to this
Oh,
question.
yes.
What is the Bank of Canada going to do?
It's going to go up
It's
again.
going to go back up. So
Yeah.
we've been given some breathing room.
Yeah.
The Bank of Canada has given us some breathing room right now. And I
Exactly.
think people should take an opportunity to capitalize on the time that the government has given us.
100%. Best idea ever.
Do you have any questions for me, Carla?
No. Honestly, like, you cover everything to the dot. Thank you so much, Charles. I really, really, really appreciate it for you to take your time.
The next time we see each other, I do want to talk about changes to the real estate legislation. We're going from REBA to TRESA. So the trust
Wow.
and real Yeah, the Trust and Real Estate Trust and Real Estate Services Act. There are significant changes that are going to be occurring out there for those people who are thinking of buying and thinking of approaching listing agents directly to buy the properties directly from them. The rules are changing as of April 1st.
Oh, and it's coming with super fast.
Super fast. Well,
Okay.
this is phase 2 of the implementation of the Trust and Real Estate Services Act. No longer can we provide something called customer service.
Yeah.
Okay, customer service is gone. There are self-represented parties, and then there are clients.
I
So,
remember you talking about this, but like you always live in like, oh, it's gonna be next year, and yes, this is
but
next
now it's
year.
next year.
Oh my God, it happens so fast.
And
Well,
in
yes,
regards to multiple
please.
offers, guess what? If the seller deems it's an open offer process, real estate agents and their clients, when they submit an offer, if it's an open offer process, everybody else competing on that property gets to see not the personal information, but the amount that has been offered for that property.
Wow.
So that is coming into play.
Whew.
It is changing the landscape
Changing
of our industry, but that's a
100%.
conversation for next time.
Okay, thank you so much. I truly appreciate it, Mr. Charles. And yeah, so stay tuned because these new rules are gonna come into place, and Charles is gonna be the one that is gonna tell us all the details about this.
I'll help you out.
Thank you so much. Thank you.
You're
Have
welcome.
an amazing night,
You
Charles.
too.
Thank you.
Thanks,
Bye.
guys.